Take a look at this. This is the price of oil. For weeks, nothing really changes. It moves slowly, predictably, and then this happens. In just a few days, oil jumps from around $75 to nearly $120. That's a 60% move. And that's not normal.
Today, the U.S. and Israel launched an unprecedented joint attack on
Iranian regime, a vicious group of very hard, terrible people.
This war
is now a full-blown global energy war.
Oil prices rose, stock losses deepened.
Traders are not confident about the IEA's plans.
Here's a quick timeline of what happened. On February 28th, the United States and Israel launched coordinated strikes on Iran. Not just military targets, but leadership. Within hours, some of Iran's most powerful figures were gone. In total, dozens of senior officials were taken out almost immediately. This wasn't just an attack, it was an attempt to break the system. But here's the part most people miss. Iran was never going to fight this war directly, because it cannot. Not against the United States, so instead of responding with force, it changed the battlefield. And for Iran, that battlefield isn't land. It's here. Because Iran doesn't need a nuclear weapon when it already has something more powerful, a choke point that controls a major part of the global economy. And that choke point is the Strait of Hormuz.
We've been telling you about the Strait of Hormuz. It's a strategic choke point. Iran has blocked it. First, it threatened attacks on ships that pass through the strait, and now it is laying mines in the waterway.
This is the Strait of Hormuz. At first glance, it doesn't look like much. Just a narrow stretch of water between Iran and Oman. At its narrowest, it's only about 30 to 40 kilometers wide. And yet, this is one of the most important places on Earth. Because this isn't just a sea route, it's a choke point. Everything that comes out of the Persian Gulf has to pass through here. Saudi Arabia, Iraq, Kuwait, the UAE, all connected to this one exit. Every single day, around 17 to 20 million barrels of oil move through this passage. That's roughly 1/5 of the world's oil, and most of it is heading to Asia. China, Japan, India. And here's the key thing. The Strait of Hormuz doesn't produce oil, it moves it. It's not the source, it's the gateway. But there's another layer to this. It's not just oil, it's infrastructure. Massive oil fields, processing plants, export terminals. Take Saudi Arabia, home to Saudi Aramco, the largest oil company in the world. Facilities like Abqaiq process huge amounts of oil before export. The UAE, Kuwait, Iraq, all feeding into this same route. So when we talk about Hormuz, we're not talking about ships. We're talking about a system, an entire network of companies, infrastructure, and economies. In 2019, when Saudi facilities were attacked, oil jumped nearly 15% in a single day. And that was just a signal. Now imagine not a facility, but the entire route. That's not just geography. That's leverage. Now go back to this. That spike we saw earlier, this is where it comes from. Because markets don't wait, they react to risk. The moment this route looks unstable, supply becomes uncertain. And when supply becomes uncertain, prices move. Oil rises. Transport costs rise. Inflation rises. And eventually, the entire economy feels it. This isn't just an oil story, it's a chain reaction. But here's the part most people miss. Not everyone loses. Because in energy markets, price matters more than volume. When prices rise, exporters earn more. And this is where Russia comes in. One of the largest energy exporters in the world. Pipelines like Nord Stream, Yamal, and Turk Stream were built to move energy across continents. So when prices rise, Russia doesn't need to sell more. It simply earns more. Instability in one region can strengthen another. And eventually, this becomes personal, because India imports around 85% of its oil, which means we are directly connected to this, that LPG cylinder, fuel in your bike, food transport. All of it is tied to global oil prices. When oil rises, everything follows. And no country is fully independent in a system like this. So go back to this. That movement was never just about oil, it was about risk. Risk to supply, risk to stability, risk to the system itself. Because in today's world, power doesn't always come from weapons. Sometimes it comes from control. Control over routes, flow, systems. And that's where Iran changes the equation.
What would be the circumstances where we would see a shutting of the Straits of Hormuz, do you think? And what impact would that have on the global price?
There are maybe two ways of looking at it. If the Strait of Hormuz is closed, the impact will be significant because it is a very important artery for the seaborne oil transportation. Around 20 million barrels per day of crude oil and petroleum products are transported through the strait. And this is about a quarter of global seaborne oil trade and 1/5 of global oil consumption.
It doesn't need to match military strength if it can influence the system itself, because this narrow stretch of water connects everything. So this isn't just a conflict, it's leverage. Iran's real weapon is not nuclear, it's geography. If you find this kind of breakdown useful, you can subscribe. I've also pinned all the research, sources, and data in the description below. Thank you for sticking till the end.